Hey guys, it's April 29th. This is Sean at eMiniSchool. I'm going to go over a couple of charts today. So this is the Russell. Okay, this is the 10-minute chart. So on the 10-minute chart, there was 10.2 points of opportunity on the long side. Okay, I know holding for the whole move is hard, so you can break it down to our smaller time frames if you feel more comfortable just scalping for a couple points. But one of the main things to know is when we're in a buy signal, not to go short. Okay, so when I first made all of this stuff, it was to tell me what not to do first. And this is a very good example of that. So even if you miss this entry, okay, if you're in a 10-minute long signal, bars are green, we're above the moving average, you know instantly don't go short. Okay, so if you can learn what not to do first, learning what to do comes a lot easier. So then we break it down to specific rules. Okay, so I just want to show the 10-minute blue bar high. Eventually, we did take it out at the very end of the day. Very good spot to get out of the trade instead of letting it come back and closing below the moving average. Okay, so very high odds that this would be the high of the day. We did go a little bit higher, but really the point is the trade is not from here to here. The trade was from here to here. Okay, trying to catch just the last little bit of it is very risky because we could pull back much deeper than just this minor pullback. So let's look at the 3-minute, and we'll show you the 3-minute signal to get in was right here. Okay, we gapped up, pulled back, go long, second set of greens, stop is here. Okay, so trade comes up, it goes sideways for a while, we get blue bars. Okay, indicators low this time. That means bigger than normal move is about to occur. Okay, so if you didn't get in on the 10-minute signal, then you could enter off of these blue bars on a break. Okay, it was 6.20 on the 3-minute. So we're always using two time frames. So we use actually three, but we're going to watch all time frames. So if the 10-minute gets blue bar high, okay, we're going to exit the 3-minute. A 10-minute blue bar high is more relevant than a 3-minute. 60-minute blue bar high more relevant than a 10-minute. So also to make the entry, okay, on the 3-minute even tighter, you can break it down to a 620 volume chart, okay, with the overnight data. So this is the same move, it's just showing the gap. So it comes up, pulls back down, right there's our signal. So using the 620 volume chart, it got us in 3 minutes earlier than using the 3-minute chart, so one bar. Okay, long was at 724, stop was at 722. So it was a 2-point risk, and then we manage the trade, okay, once we're in it. Okay, and we really want to hold the trade for maximum potential, which is blue bar high or targets. So our outlook from last night was up today because yesterday we hit our lower target, um, like we said in the email that we sent out last night. So our outlook was up today. We actually went a little bit higher than our upper target for the day. But it's really good just to keep with the trade until there's a reason to get out. So for your risk, make the reward actually worth it. A lot of people, you get in, maybe your stop is a point or 2 points. You're going for 6 points, you get up a point, 2 points, and you take it because you're not used to having profit, or for some reason you just want to take the money. At that point, you've already overcome the initial risk. So let the profits ride and actually make it worth the risk. Because once you get out, if you're up a point, 2 points, you take it. Now you have to find another entry, or worse, you're going to think, well, if I'm not long, I should be short. And you might actually end up going short as this is going sideways. There's a lot of reasons in real time why you might get tricked into going short. But if you stick to the pattern and the colors of our bars, it will make it much easier to know what not to do. And then you can always break it down to a smaller chart. There was a couple different entries on the 620 volume. There was another entry here. Stop on that was even tighter, and an entry here. Actually, this would not be an entry because we had a blue bar high right here on the 10 minute, so we would not take this signal. So there's always usually another entry, but the point is if you get in here, your stop is here. You might see it coming back a little bit. It's better just to stick to the rules of the trade. Stay with the trade, make it worth the risk. So anyways, and also this is a very good example today of the 10 minute ES just basically did nothing today. Let's look at the 3 minute real quick. Basically gaps up, ran, we had blue bar high. It just kind of just slowly, it was just in a 3, 4, 5 point range. Really nothing to do here. Most traders will lose a lot of money here because it's not moving. So you're going to try to predict the break multiple times and it's not really breaking, it's not doing anything. So we have a rule to always look at all three markets, ES, Russell, and NQs, and really trade what's in the pattern and really what's moving. It's a very good habit to be in so you're not hypnotized by one market sucking you in to do the wrong thing. And you see the Russell had very nice moves today. So there was 620 opportunity on the 3 minute and 10.2 on the 10 minute going off that blue bar exit. See you guys tomorrow.